Chapter 20, Income Inequality and Poverty. In this chapter, these are the questions we are going to answer. How much inequality and poverty exist in our society? What are the problems measuring inequality? What are some of the leading philosophies on the proper role of government in altering the distribution of income? What policies are used to fight poverty? What are the problems with these policies? Review. Market economies usually achieve greater prosperity, but prosperity is not shared equally. A person's earning depends on supply and demand for that person's labor, natural ability, human capital, compensating differentials, discrimination, and so on. Income distribution. Labor earnings make up about 2/3 of total income in the United States economy. The factors that influence wages also largely determine the distribution of the economy's total income. They also determine who is rich and who is poor. Resource allocation in free markets is inefficient but not necessarily fair. Resource allocation in free markets is efficient, but not necessarily fair. The government should redistribute income for greater equality. Measuring inequality. 4 questions of measurement. How much inequality is there in our society? How many people live in poverty? What problems arise in measuring the amount of inequality? How often do people move between income classes? The U.S. income distribution in 2017, the group bottom quintile, the annual household is under 24,827. The second quintile, that is the second 20% of the population, is between 24,827 and 47,218. The middle quintile, the middle 20%, is 47,218 to 77,158. The fourth quintile is 77,158 to 126,605. The top quintile is over 126,605 and over. Top 5% of the population makes 24,088 and over. Inequality measure. Inequality measure, or we call it quintile ratio, income received by the richest quintile of the population divided by the income of the poorest quintile. The degree of inequality varies substantially over time, and it also varies substantially around the world. This is U.S. income inequality from 1950 to 2017. That is income share of the top quintile divided by the income share of the bottom quintile. Inequality around the world. Income share of the top quintile divided by income share of the bottom quintile. Poverty. The poverty rate is the percentage of the population whose family income falls below an absolute level, or what we call poverty line. The poverty line is set by the federal government and is defined as 3 times cost of providing an adequate diet, depends on family size, and is adjusted every year to account for changes in the level of prices. Poverty in the U.S. In 2017, in the United States, median family income was $75,938. Poverty line for a family of 4 was 24,858. A poverty rate was 12.3%. 39.7 million people were living in poverty. U.S. poverty over time from 1959 to 2017. This is percent of the population below poverty line. So who is poor? Poverty is correlated with race. Blacks and Hispanics are more than twice as likely to live in poverty as whites. Poverty is correlated with age. Children are more likely than average to be members of poor families. Elderly are less likely than average to be poor. Poverty is correlated with family composition. Families headed by a single mother are about 5 times as likely to live in poverty as families headed by a married couple. U.S. poverty rate by group 2017. All persons, the poverty rate was 12.3%. White, non-Hispanic, the poverty rate is 8.7%. Black, the poverty rate is 21.2%. Hispanic, the poverty rate is 18.3%. Asian, the poverty rate is 10%. Children under age 18, poverty rate is 17.5%. Elderly, poverty rate is 9.2%. Married couple families, the poverty rate is 4.9%. Female household, no husband present, the poverty rate was 25.7%. Problems in measuring inequality. Data on income distribution and poverty rate give us some idea about the degree of inequality in our society. It's based on annual incomes families earn. An incomplete picture of inequality is painted. Number 1, in-kind transfers and tax credits. Transfers to the poor in the form of goods and services rather than cash tax credits. Aimed at helping the poor. The problems in measuring inequality. The economic life cycle causes inequality in the distribution of annual income. May not represent true inequality in living standards. Life cycle, that is regular pattern of income variation over a person's life. People can borrow and save to offset life cycle changes in income, for example, saving for retirement. Transitory versus permanent income. Transitory changes need not affect living standards. Transitory changes need not affect standards of living. A family's ability to buy goods and services depends largely on its permanent income. Permanent income is a person's normal income. Economic mobility. Many people move among income classes. Some reflect transitory variation in income, others more persistent changes in income. Many of those below the poverty line are there only temporarily. Temporary poverty is more common than the poverty rate suggests, but persistent poverty is less common. Persistence of economic success from generation to generation. Political philosophy. What should the government do about economic inequality? Political philosophies of redistributing income, utilitarianism, liberalism, libertarianism. Utilitarianism 1. Utility is a measure of happiness or satisfaction. Utilitarianism, government should choose policies to maximize society's total utility. Diminishing marginal utility. As a person's income rises, the extra well-being derived from an additional dollar of income falls. Because of diminishing marginal utility, redistributing income from rich to poor increases utility of the poor more than it reduces utility of the rich. Yet, utilitarians do not advocate equalizing income because it would reduce total income of everyone due to incentive effects and efficiency losses. Liberalism. According to liberalism, government should choose policies deemed to be just by an impartial observer behind a veil of ignorance. Maximin criterion. This states that government should aim to maximize the well-being of society's worst-off person. Liberalism calls for more redistribution than utilitarianism, though still not a complete equalization of income. Income redistribution is a form of social insurance, a government policy aimed at protecting people against the risk of adverse events. Libertarianism. The government should punish crimes and enforce voluntary agreements but not redistribute income. Libertarians focus on the process, not outcome. Government should enforce individual rights, should try to equalize opportunities. If the income distribution is achieved fairly, government should not interfere, even if unequal. Policies to reduce poverty. Poor families more likely to experience homelessness, drug dependence, health problems, teenage pregnancy, illiteracy, unemployment, and low educational attainment, are likely to commit crimes and to be victims of crimes. Most people believe government should provide a safety net. We now consider a few such policies. Minimum wage laws. Arguments for helps the poor without any cost to government. Little impact on employment if demand for unskilled labor is relatively inelastic. Argument against. In the long run, demand for unskilled labor is likely elastic, so minimum wage causes substantial unemployment among the unskilled. Those helped by minimum wage are more likely to be teens from middle-income families than low-income adult workers. Welfare. Welfare is a government program that supplements the incomes of the needy. Temporary Assistance for Needy Families, TANF, assists families with children and no adult able to support the family. Supplemental Security Income, SSI, provides assistance to the poor who are sick or disabled. Welfare, critics versus proponents. Critics. Programs create incentives to become needy, contributed to the rise of single-parent families. However, the severity of such incentive problems is unknown. Proponents. Being a poor single mother or welfare is a difficult existence at best. Inflation-adjusted welfare benefits fell as single-parent families increased. Negative income tax. Negative income tax, universal basic income, a tax system that collects revenue from high-income households and gives subsidies to low-income households. The Earned Income Tax Credit, EITC, applies only to the working poor. It doesn't discourage recipients from working. It doesn't help alleviate poverty due to unemployment, sickness, or other inability to work. Example 1, universal basic income. Assume the government uses the following formula to compute a family's tax liability. Taxes owed is equal to 1/4 of income minus 20,000. Calculate the tax liability. Families earned income $160,000, $80,000, $40,000, 0. For $160,000 income, the calculation is 160 divided by 4 minus 20,000. Taxes to pay is 20,000. If your income is 80,000, the calculation is 80,000 divided by 4 minus 20. You pay 0 taxes. If your income is 40,000, you divide 40,000 by 4, you subtract 20,000, and the taxes you pay is negative 10,000. If your income is 0, you divide 0 by 4, you subtract 20,000, and taxes to be paid is negative 20,000, or you receive 20,000 back. In-kind transfers. In-kind transfers, goods or services provided to the needy. Examples, homeless shelters, soup kitchens, supplemental nutrition assistance program, or SNAP. It gives low-income families a plastic card that can be used to buy food at stores. Medicaid, government-provided health care for the poor. An alternative, cash payments. People buy what they most need, but critics argue could be used for drugs and alcohol. Anti-poverty programs and work incentives. Assistance from anti-poverty programs declines as income rises. The result, poor families face high effective marginal tax rates, exceeding 100% in some cases. Such policies therefore discourage the poor from escaping poverty on their own. Reduce the work disincentive of anti-poverty programs. Reduce benefits to poor families more gradually as their incomes rise, but it greatly increases the cost of programs to combat poverty. Workfare system requiring people to accept government jobs while collecting benefits. Provide benefits for only a limited period of time. In 1996, welfare reform bill, 5-year was lifetime limit. Think, pair, and share. Suppose a friend comments to you, I think welfare recipients are simply lazy. I have a friend who receives temporary assistance for needy families, and when she was offered a part-time job, she turned it down. Number A, what happens to a welfare recipient's benefit if they increase their income? Number B, what is the effective tax rate on their additional income if they were to lose $1 in benefits for each dollar of additional income? Number C, how does this system affect a welfare recipient's incentive to work? Are welfare recipients necessarily lazy if they turn down part-time jobs? Chapter in a nutshell. Date on the distribution of income. Wide disparity in U.S. society. The richest fifth of families earns more than 12 times as much income as the poorest fifth. Important for understanding variation in living standards, in-kind transfers, tax credits, the economic life cycle, transitory income, and economic mobility. When taken into account, economic well-being is more equally distributed than annual income. Political philosophies. Utilitarians choose the distribution of income that maximizes the sum of utility of everyone in society. Liberals determine the distribution of income as if we were behind a veil of ignorance that prevented us from knowing our stations in life. Libertarianism have the government enforce individual rights to ensure a fair process, but then would not be concerned about inequality in the resulting distribution of income. Chapter in a nutshell. Various policies aim to help the poor. Minimum wage laws, welfare, negative income taxes, and in-kind transfers help alleviate poverty, have unintended side effects because financial assistance declines as income rises. The poor often face very high effective marginal tax rates, which discourage poor families from escaping poverty on their own.